Good evening, everyone. This is Ishan, and you're watching the InvestWorthy. So today I'm back with the weekly market update for the next week coming up at like 27 January to 31 January. Let's have a look at the disclaimer. Actually, this report is for the education purpose only and doesn't constitute any financial advice. Trading involves significant risks, and past performance is not indicative of future results. Consult with a licensed financial professional before making any trade decision. Use this information at your own risk. Thank you very much. Let's move ahead. So, the last week in the fundamentals, we have all the Mr. Donald Trump. Mr. Donald Trump, the President of United States, issued an executive order declaring a national emergency due to an active threat to the American people from high energy prices. Trump vowed on Thursday that with energy prices going down, he would demand interest rate drop immediately. Donald Trump criticized the European Union's trade practices, accusing the bloc of unfair treatment toward the US. He said imposing tariffs on European goods is the only way to achieve fairness in trade. Donald Trump stressed on Thursday while addressing the World Economic Forum through a video stream that he will make the US the world capital of artificial intelligence and crypto. He officially signed the crypto executive order on Thursday in the Oval Office. With journalists in the room, European Central Bank Christine Lagarde said on Wednesday that she is confident that the inflation in the Eurozone will be at target in the course of 2025. Bank of Japan raised its benchmark interest rate by 25 basis points from 0.25 to 5.5% in an 8 to 1 vote on Friday to its highest level in 17 years. With the yen strengthening modest against the US dollar after the announcement. The annual inflation in Japan came to 3.6% in December, higher than November's figure of 2.9%, according to a report released by the Statistical Bureau of Japan on Friday. The Euros area's private sector returned to growth in January, according to preliminary report by S&P Global on Friday. The composite purchase manager index went just over the no change mark, landing at 50.2, reaching a 5-month high and exceeding forecast. Private sector activity in UK improved marginally in January, with the growth rate rising to a 3-month high. The S&P Global and Chartered Institute of Purchasing and Supply (CIPS) said on Friday. The United States PMI Composite Output Index, which accounts for both services and manufacture business activity, came in at 52.4 in January, declining from 55.4 recorded in December and hitting a 9-month low. The Consumer Sentiment Index in United States declined in January compared to the month prior to stand at 71.1. A final report posted by the University of Michigan showed on Friday. The figure was down 3.9% on a monthly basis and 10% on an annual level, grooming in lower than preliminary reading of a 73.2. German economic sentiment worsened in January, with the sentiment index dropping to 10.3 from 15.7 in December, according to a report by a Center for European Economic Research (ZEW) on Tuesday. The unemployment rate in the UK rose to 4.4% in 3 months to November, data released by the Office for National Statistics showed on Tuesday. But also, as the Mr. President Trump is back, we see the quite a big reversal in the market. Everything just took a sharp turn. So the week ahead in the fundamentals. The coming week presents a crucial intersection of monetary policies, corporate earning, and trade developments, all of which could significantly influence the global markets. This month we are having a first meeting of a Federal Reserve for the decision of the interest rate cuts and other things. A investor will be having a quite more focus on the Fed decision. Then we have uh, then we have earning reports for the Apple, Tesla, and Microsoft. And Thursday we have for Q4 US GDP data will further shape market sentiment. And in Europe, we will see ECB will do something about the interest rate. Expectation is that they will cut the rates, and Christine Lagarde on further rate cut. She is very much confident that they have a good level of interest. And then we have Mr. President Donald Trump. who is just telling, obey me or be ready for the tariff. Let's see where this guy will take the markets to. So let's have a key economic events for the next coming week. It's +4 GMT, like time zone +4, which is for Dubai. And Pakistan, India, they will have +5 and 5:30. So first of all, in this week, we are having a Chinese manufacturing PMI, which will affect the gold definitely because they are part of the gold buying team. Then we have on a Tuesday Swiss franc. Then we have a consumer sentiment confidence for the dollar and inflation for the Australia. Then we have a speech from the Bank of England. Yes, definitely the interest rate policy, money supply for the Canadian dollar, and then their press conference. Then we have a federal fund rates for the dollar, which is expected to be lower, and then we have a euro rate. So this all month is about growth rate and interest rate. Should they cut it down? Should they keep it up? This is all about. This is a very important week. This will confirm the turn market took last week. So let's go to the next part. So the watch list for this week we have in forex we have euro, pound, all the majors, dollar, yen, Australian dollar. For the indices, we are focusing on the US 100, US 500, US 30, like Dow J, S&P 500, and the US Tech. Then we have in commodities, gold and crypto, Bitcoin. So for the euro dollar, trader sentiment, we have a bearish COT report, and you can see the expectation for the interest rate, which is coming this week. We can see the forecast should be the rate cuts. For the dollar, we don't have a rate cut, but the euro we have a rate cut. And you know when the interest rate goes down, what how it affects the currencies. Then we have a pound dollar. Pound dollar, we have no forecast for any rate cuts. For yen, yes, we do have a forecast, but this is going to be in the March of 19th. The next meeting when they will decide should the market, the interest rate go low. And then we have Australia. Australia, we have for Australia, we have on February 17th, like they will cut the interest more. And then we have a US Center 100. It has a declining bullish COT report. For the 500, S&P 500, we have the bearish, and US 30 Dow J. It's also the declining bullish COT report. It means like it's going to take a turn to the downside. But as my experience, whenever the Trump is there, the business is boom because he's a business guy and he knows how to rock the business. Like the way the first of his week in office, he's urging oil to go low, and also he's expecting energy prices to go down, interest rates to go down. Uh, let's see how this is gonna affect the business. And he's spotting crypto and AI. Then for the gold, also they went high. Everybody's parking their money in the gold because they know if any silly decision taken that will affect the inflation and money is not safe. So the guys are just back to the holy currency, that is gold, silver, precious metals. It's bullish in terms. For the BTC, Bitcoin, what I'm expecting if it doesn't break the 110,000 level, I will see it down to 94,000, 99,000. This is just an expectation, technical analysis. I will show you in the charts how I'm expecting all this. Let's move to the trading view. And today the first pair is the pound. Oh yes, it's already on the high of the 419.97. I'm seeing a lot of see the weakness here on the top of here. I'm seeing the weakness, and if we see the strong buy side in down area, it's around this. This is the area which needs to be retested, and buyers are sitting here. So what I'm expecting this is to come from this level to come here. This is my expectations for the BTC for the next week or the next coming time. It will come here at the 94,000, 96,000 at any time soon. So if it doesn't break this 110,000, because on the other side we have, we don't know where it will go. We will follow, we will see the patterns. If it is found there, the levels, we will go for that. Then I have a gold. And the gold, what we can see in the gold, I have seen something which is making me suspicious, and I'm expecting gold to be bullish in the coming time because it has already broken the weaker highs. See, it closed above this. It has closed above. This is the area. I was saying like market will make another rejection and go back, but at this level, market closed above, and it's a weekly chart. It's nothing something like daily or short-term time frame, which is showing a quite pressure and momentum. And if I apply the Fibonacci, that's for the longer term. Our targets, our golden ratio is being formed here at around 3,200. So here is our arrow. We can expect gold to come this level, which is not possible to mark on a chart right now on this scale. But 32, 3,000, 3,200 is expected. And on the way, 12,997, that is the level which is expected. So let's move to the shorter time frame and see what we can do there. Even on the daily time frame, we have a strong bullish move which is continuously going up. Even if it retraces back, it is gonna be near here, 700 or 2750. These are the areas, but still it's in the bullish formation. On the hourly chart, it's making some retracement, which you can call a pullback, and I'm waiting for the continuation phase. And on the Monday morning, we will know everything. But what I'm now looking for a buying entry, so we can go above. We will see what we can do. But for my views, as per my analysis, if it doesn't break below the 2700, or in the longer term, it doesn't go below the 2500, it's bullish, guys. It's gonna go up. But on the shorter time frame, we, for a trading perspective, because we are a trader and we trade between the levels which we have seen, we can expect market to come back here. And let's see what opens on the Monday. Dollar yen, yes, as we spoke there, is doing great. It's trying to come back to the area where it rejected from. And above this area, we can look for the buys. But still now, we can expect it to come down because this is the area which is being failed. This is the level I'm expecting. It should be around here, 154. But if it crosses above, like here, we can see it from here to rise above 157, 397, and then bounce back to 154, or straightly come back to these levels. These are the levels I'm expecting. For me, because I've been in the market for a long time, for me, from a naked eye, I can see where the order blocks are, where the supply and demand levels are. I just have to see plot. Now I'm seeing a big drop here until there. So I will be selling this position. My previous sell position, which already hit, which was hit, and now I'm looking for another sell position. Hopefully, I will enter from here, unless it's broken on the other side. Then we have euro dollar. Yes, this is all what happened when the Trump just moved into the Washington in the president house. When he moved, everything turned back. But here is the scenario which seems fishy to me. This is the area of a sell zone. This is the supply area, a big supply area. What we can do to confirm the levels, and this was the demand where it was originated from. So there are two. There are. This is the scenario here. Market to come back, or from above this level, 1.6. You can expect it to come back this level because this is the previous supply we have, which needed to be tested. So this was for the euro dollar. Now let's move to the other pound. Same is the case here. Everything reversed. Everything changed the direction as soon as the President Trump is back. So this is the pound dollar, and this is the big candle which just come whenever when the Mr. Trump, President Donald Trump. So this is the situation for the pound dollar. Very much bearish in this current move, but here we see a pullback, a strong pullback, which could either lead back to, because in my previous forecast, in the daily forecast, I was expecting it to come back this. Now it's here, and we will wait if it come back to this level 27, because this is the last supply area. Yes, if you see, this is the area for the supply, and for the demand, we have this is the demand, smaller demand. This is the area of the equilibrium between the supply and demand markets. Because their comebacks, here we can expect consolidation also. Market can make sideways, and then further fundamental issues can make it go up or down. So these are the scenarios we are just seeing with, as per the Trump is lowering the interest rate, and when the interest rate is lower, people take the money supplied. It means they have excessive money which they need to supply, and appreciate this might appreciate the dollar in the short term, but in the longer term, it's gonna make it lose the value the dollar in the longer term. So these are the scenarios for the pound dollar for the next week, which will only happen, which will be confirmed when we see market is opening. But I expect a reverse at least. This area, this is the smaller area. I expect market to come on this smaller area to retest the level if it's going up. Before moving up, you can expect on the shorter time frame, if it doesn't open with a gap and above 250 levels, you can expect it to back to the 24220. Let's move back to the AUD. In the AUD, we also have the same scenario. Every major pair has the same scenario. Price just reversed back. As you can see here, it's this is here it started. This was the trend line, which is almost seem broken, but it could be a fake out move. Only the next week will confirm it. But in a shorter time frame, if you look at, we have the next level, the above this level we have. There is a supply sitting 64152 on a 4 hour time frame. But on a daily, yes, in the daily we also have this is the level. This needs to be retested. So this scenario could be like this, and then direction from here on the upside. These are the scenarios for the Australian dollar. Gold we have already covered. Let's move to the US tech. As per energy prices will go down, they are being promised, so they stop the immediate orders right now and expect new prices to come. For that time, we might see some slowdown, some consolidations, because in this month, in this week, we are having a quarter earning reports for the US tech side. And if it doesn't make any, if it doesn't break this level is not broken, we can expect it to drop. This was full. This area is still pending. From here, we can expect it to go back. So these are the zones. Okay, guys, best of luck for the next week. And thank you very much for watching this video. Please hit the subscribe button. And in the upcoming time, I will be updating market on my YouTube community page. I will be updating about what I'm doing myself and what I'm seeing in the market. If you like it, subscribe it, share it, and hit the bell icon button. And also, if you want me to analyze any market, any part of the market, just let me know. And if you have any question, also write down in the comments box. Thank you very much.